All right, ladies and gentlemen, I hope you had a wonderful day. We are on the computer today because I have a lot to show you, and I want to go over my debt ceiling prediction. We had a lot of information today, and that's even what led to the move that we saw today. It doesn't look like much, but I mean, take a look. It brings us up to the top end of the last couple of weeks here, but there was a lot of optimism about the debt ceiling, and now we have a date of Sunday to be on the lookout for. So I have a theory for you. I want to go over it, and the best part about all of it, we have a little bit of context, or at the very least, this might help you understand a little bit about what has happened now and what to be looking out for in the near term over the next week or so, because this has been a big deal, and don't let it distract you. We got a couple of follow-up events, so let me know what you think about this. Honestly, you could use that comment section. Everybody has an opinion on the debt ceiling, and like we said, the amount of hedging, if you actually hedge for it, it means you believe it, and the market is showing something. Even today, the credit default swaps, they actually went down a little bit. So we're going to go over a couple of things. I even got some keys for you. Maybe we could start with this. Maybe I could just keep it very simple here to start out. Oh, man, I might have to zoom in, but it's very simple. Number one, the event now is on Sunday. This is part of the reason why we ran up today. So if you take a look here at the chart, we were actually pretty low. It was a slight gap up in the morning, but you gapped up to exactly where we opened up yesterday. But it got crazy around here because Biden came on before his trip to Japan. He said he's going to cut the meeting short. They're working on a deal, and he said he is optimistic once again. And then even McCarthy followed it up by saying that a Sunday deal is possible. So they said a deal on Sunday is possible, and now that is the event. So Biden appointed these people to be working while he's gone. Even Kamala, she will be making a statement tomorrow on Thursday, but the real event that we are looking for now is Sunday with the debt ceiling meeting. So I said this in the watch list yesterday. My base case is that they come to an agreement that is a quote-unquote pause or a temporary suspension of the debt ceiling that will allow them to keep spending however they please or at the current rate until they can come back at a later date and figure this out. So I do not expect them to come to a full agreement, hence you're 2 weeks ahead of the date and there's no agreement. So that's why I feel that way, and given all the tensions, but hey, you never know. We're going to see what happens, but that's why whatever happens on Sunday will create an event, and it's very simple. If there is good news on Sunday, the market will have temporary upside. This is my opinion, and it will be range-bound until the PCE, so don't let this market fool you. It loves to go to the next event, and that is the next one. Next Friday, after we get Sunday, so coming into next week, on that Friday, we will have the PCE, and just remember, we just had the CPI following Powell, and it's not like we really got the best news, and even then, the Fed futures in terms of pause and all of that, everybody is still debating a little bit, so if there is good news, temporary upside and range bound until the PCE. But now if there is bad news on Sunday, this is where we start to get a problem, because then that's where all of the hedges, bonds will catch a bid, gold will catch a bid, and now that will be exactly 2 weeks away from the X date. And now the market is free game to respond if we are going to use 2011 as a playbook. And again, that means go through everything we've gone through 2 weeks. If they meet on Sunday, and imagine them talking so positively, and then that turns out to be nothing, I mean, people will feel pretty sour about that. Where we go, I think it'll be lower, and maybe depending on how we move at the upside of this range, we'll see how the downside is treated. But now let's go to the chart a little bit so I could show you somewhat about what I'm talking about, and maybe the context and where I'm coming up with this may help you understand. But this is what I want to show you, is what happened at the beginning of the year, where I'm getting this idea from. This is where it is all stemming from. So let me open up all of this and I'll show you what happened, because remember, beginning of the year, remember October, December, all of that was now, oh man, I just opened up that stuff. But October, November, it was pretty nasty. I mean, to come after December, it was not really the best market. I mean, 380 really wasn't the best. It was a pretty rough year, and then all of a sudden 2023 came in. You started getting different data. People started feeling a certain way, And then our good friend Powell. Well, there was a couple of good sets of data. That's what started to bring us up here a little bit. But right here is where I want to focus on, because quickly as the market went up throughout the beginning of this year, all the way till February 1st, there was the idea of this no landing scenario. People started to get optimistic again that inflation will come down. Earnings weren't that bad. Stocks are still up. Maybe things are getting better. It's a new year, new me, all of that good stuff. And the confirmation was Jerome Powell on February 1st. He came in and it was a surprisingly dovish Powell. Again, even the same thing also in January. And even at the end of the year, Powell was pretty dovish coming into all of that, but you got good news off of that. Powell was good. First meeting of the year was a success, and the market was already up into it, and then we were able to pop. Now, ironically, we are at the same prices right here, right now, but let's run through what happened. So, man, I got to reopen. I'm going to have to pull this up. 100-day just gives you a better look of it all, but let's start with what happened on February 2nd. So the next day, you were able to go up, and this is what I mean by if we get a resolution on Sunday, I could see one of these temporary pop scenarios given we are already high coming into this event and given all the fear and all that, and that was part of the optimism. People are saying if the debt ceiling ends up good, it gets rid of a tailwind, and now the market doesn't have to worry about that being an issue. It could unlock some upside, but just like we did in February, even after Powell, it was all good news. People were excited. You went up a little bit, then why did we start stalling out? So like I said, February 2nd, there was no data, no nothing like that. That's February 16th. But next day, there was absolutely nothing. Where is it? Right here, February 2nd, next day you had jobless claims, nothing surprised. Like literally the data was actually very, very calm. And that's ironic because the next day on February 3rd now, this is where things started to get really interesting and then led into the volatility of the next week. The non-farms were a gigantic beat, 500,000 jobs. The expectation was 189. And remember, good jobs was not a good sign there. But again, people were getting pretty gassed up off of this no landing scenario. But then after that, then a couple of days later, remember Valentine's Day, I think didn't ChatGPT say things are going to go bad? Well, you had CPI. It came in hotter than expected. And just remember, this was all after a lot of positivity, very good news, even off of Powell. Then the market got an event. Then it waited for the next couple of events. But really the second half, and then we started going down. Again, there was more data. February 16th was like the PPI. And then you got into SVB, and then Powell started to go here. And believe it or not, it's like right after Powell, we kind of stabilized with the bank situation. And then now we're back up here. Like I'm saying, really all I'm focusing on is right here because this was a moment you had a lot of upside. You ran up into an event. You had a big event like Powell. There was people you could have been very, very worried. And then once you started not feeling worried, it's like, hey, if that event is good, if Powell's good, we could really rally. We broke out into the range, but then you didn't keep going crazy, and then we got restrained by the next set of data. So given what we got here and everything we've talked about and now the looming debt ceiling, I think this might be what we see. Otherwise, my expectation is we do nothing until Powell, and then that would be the middle of June, is it? Or yeah, June 13th, June 14th, but I guess that's only a month away. But then again, now you have PCE, another CPI and all of that, and that'll probably give us some of the action that we're looking for to get us into, or maybe into out of summer, second half of the year, or into the second half of the year, and then we go from there. So, Chad, that is my theory. I hope it was informational. You let me know what you think. Again, I have a couple of different plays, but now it all boils down to Sunday. Like we said, all the bond plays, all the gold, it just boils down to what happens Sunday. If there is an agreement, I think all the hedges reverse. You get a little bit of upside. That's how you could position for that, or vice versa. Now, none of this is a recommendation. You already know that. I'm not a financial person, anything. And I'm ending the video now because I love you, and I'm going to see you on stream. You know we're live, youtube.com/the stock market every day. I start with this. Have I ever ended with this? Oh, my God. Okay, horn.